Hello traders and welcome back to Smart Money Insight. I am Rein, your guide to uncovering opportunities in the stock markets. Well, before we dive in today's topic, let's take a look at this short clip.
Tyson-Paul 12 of 53, 23%. Tyson coming out aggressively.
Well, if you have watched this match and you haven't figured out on how to monetize it yet, then I would say this might be the chance. And no, I'm not talking about betting on who's the winner here. It's just all about the Netflix. Well, the Netflix recent stock surge has been driven by its strategic leap into live events. For example, like this Tyson-Paul boxing match with an average of 108 million viewers. This highlights its potential in the live streaming space. And also for Netflix, it's doubling down with a $5 billion WWE partnerships, then upcoming live National Football League Christmas Day games, and also the debut of 2025 launch of the WWE Monday Night Raw. But this has not been all the smooth sailing. There is some issues like technical issues, like buffering and streaming glitches that has raised questions about its readiness for even a larger scale events. But with that said, Netflix stock today has soared nearly to 93% year to date. Well, I would say it's outperforming tech giants like Amazon or even Apple. So the question here is it a time to short the Netflix, or does it still have a room for growth? Now join me as we analyze the key factors that drives this Netflix performance, and let's explore whether this stock still holds potential or it is a time to cash in. Now let's check on its key fundamental here. Well, the first one is the revenue growth. Well, for the Netflix, the revenue grew by 15% year over year in Q3 2024 and reaching to $9.82 billion. And this indicates a strong operational performance. Well, for your information that its competitors like Disney and Amazon, they just reported a single-digit revenue growth in the same streaming division. So I would say this indicates the company Netflix being superior in executing and capturing the market shares, and it also has the ability to monetize these new markets and diversify their revenue streams. Now let's go and check its the subscriber growth and engagements. Well, for Netflix, it's added 5.07 million paid subscribers globally in Q3 2024, reaching to 282.72 million members, and this is a 14% increase year over year. Well, while the engagement remained high with the average of 2 hours of viewing per user per day. Well, as for information that for this business, I would say subscriber growth and high engagement is very important, as this is going to be the key driver for a long-term profitability. Now, let's take a look for its profitability matrix here. Well, in Q3 2024, its operating income rose to 51.8% year over year, with operating margin of 29.6%, and its net margin is 20.7%. Well, this outperforms many of its competitors. Now, for example, if you know the competitors like Disney, their operating margins of streaming business are significantly low. As you probably know, they just right now continue to invest heavily in the content and the customer acquisition. So the business for Netflix now, I would say it's beyond this growth at all costs model. The business for Netflix now is shifting towards into a profit-oriented strategy, which this will create a shareholder's value. Now let's take a look at its valuation matrix. Now the forward price to earning is 45.73, and the price to sales, the PS ratio, is 10.21. Well, I would say that it is higher than the industry average, but at the same time, I would say this reflects of its leadership position. And what do I mean by that is that, well, at a glance, the valuation might appear stretched compared to industry peers. However, when you try to dive deeper to its business, then I would say that this will tell you another story, which is, well, it tells you about the future earning potential, especially with its entry to a live sports event and the advertisings as well. Now, let's check on its diversifications and new revenue stream. Well, as you probably know, right, that for the Netflix, it has the recent move into live events, such as the $5 billion WWE deal and the National Football League games. I would say that this is going to be, investors expect that this will significantly boost the revenue. So the ads revenue alone is forecasted to double in 2025. So this open up new revenue streams and strengthen the Netflix competitive mode. Well, for information that the competitors like Amazon Prime Video and Apple TV Plus, they have not achieved a similar diversification into live sports on the large scale. So this makes the Netflix strategy a potential differentiator and reducing dependence on traditional streaming content. So, well, as you can see that Netflix has a strong financial performance, consistent subscriber growth, profitability, premium valuation, and the strategic diversifications that makes Netflix a very compelling investment compared to their peers. Now, let's take a look on its pricing analysis. Now, let's take a look at this Netflix chart. As you can see that I've drawn a several black trend channel over here, as I call this a key trend. Well, this key trend represents a long-term uptrend, suggesting that Netflix has been in a sustained bullish trend since its recovery from the steep decline somewhere in 2022. And the reason for the decline back then was, well, post-pandemic slowdown in the subscriber growth, and then there is an intense competition in the streaming business, like coming from Disney Plus and Amazon Prime. And also, if you remember that the stock was badly hurt by the macroeconomic factors like rising interest rates, and eventually it comes down to investor concerns about the Netflix ability to make profit and a good cash flow back then. Therefore, the stock plunged badly. Alright, but if you notice somewhere in the mid of 2022, there's a recovery here, alright? And somehow that this recovery aligns with the Netflix pivot to an advertising supported subscription model, and also to the Netflix initiative like password sharing crackdowns to boost its revenue. And somehow I would say that this move improved the investor sentiment and operational matrix, and therefore that this creates a new trend channel, alright? I would say a stronger, a steeper, a more aggressive green trend channel, alright? So right now there are two trend, the black one, the key trend, and the secondary trend, the green color. So bear in mind that over here, alright, there is a big fundamental changes happening back then, alright? Now, let's take a look as per today. Well, the price right now is sitting somewhere at the $897.79. And this is at all-time high. And I would say that this is at a very critical junction because it just crossed over, well, this the key trend. And it's just about to test the next or the resistance line over here, coming from the secondary trend. Right now, I would say that it's on the way to create a new high, and it's very hard to determine at what price it will be at because it's at all-time high right now. Therefore, probably we can use the tool like Fibonacci And one of the way to do that is to find its peak and trough. And let's connect these 2 points together to predict at what price it will be heading to. And right now, probably if we stretch this price to the next resistance level, perhaps we can guess if probably the price is heading to, well, at the $1,000 price level. So the question is that, how the journey of or the movement when this price or the stock is creating a new high or creating a new resistance over here. Well, first let's delete this Fibonacci line because it's very messy. All right. Well, despite it's very challenging, but I would say luckily we have the secondary trend channel that can help us, that can guide us to predict the price movement. Well, since as you can see that this green trend line is so steep, so aggressive, so I would say that it's pretty unlikely that price will cross over this line and it surges to $1,000 level. I would say it's pretty unlikely. So looking at its precedence, I would say with the current bullish sentiments, it's likely the price will be consolidating somewhere around here. Now take a look at its historical movement here, right? So judging on this, we can pretty much predict that the price will be somehow consolidating somewhere around this price with this line as the support level. So the price will be consolidating somewhere, I would say between $900 to $950 level. Well, however, if there is a pullback, then I would say, well, the drop will be at this line, somewhere around 810, all right? Looking at its historical drop, it's you see it's sitting at the key trend. So I would say that from the historical movement, if sitting at the key trend, it's at $810 level. Despite that, the first support level here is at $850. All right. Now let's take a look at its current sentiment by looking at its option market. But before that, for those of you who are traders that prefer a more convenient way to participate in this bullish opportunity in the way that less risky and having more potential upside, then the answer is that you have to identify a smart money opportunity. And to do that is actually kind of simple. And let me show you by using my proprietary system called Trader GPS system. And let's check this out. Now, to spot out this smart money opportunity, well, we no longer need the trend channel. We can just erase it. Then with a click of button, then Trader GPS will come and helping us to calculate and analyze the potential for smart money opportunity. Now, let's take a look at this couple of the green arrow facing upwards here, as this is potential when the smart money come to the stock. And the reason why as a traders we love so much identifying this kind of opportunity, because very often that when the smart money come to the stock, it helps to push the price higher with relatively lower risk. Now let's take a look couple of these samples over here. The moment that the investors, smart money comes in, then the price surges higher. All right. So this is going to be easy for us as a trader if we can spot out, identify this opportunity, and then we ride together with the smart money. Now, take a look at the last opportunity identified by the system on Netflix. Happens on the 18th of October, and that is when the price was at $763. And as per today, the price is at $897, all right, $879. So if we successfully identified this opportunity back then, we ride together with the smart money back then we see a 20% gain, all right? It's that simple, all right? Now, if you want to know more about how to utilize and benefit from the Trader GPS system, and you want to know more how Trader GPS system works, then you can easily check on the descriptions given below, all right? Now let's go back and check on the option market. Now let's take a look at its implied volatility smile chart over here. Well, for those of you kind of new, let me explain on how to read the chart. Well, this y-axis represents the implied volatility level. This x-axis represents the strike price. This at the bottom here represents the volume of transactions. And then the blue dot represents the put and the red dot represents the call options. Now, if you notice that well, the implied volatility for put, it decreases steadily here as the strike price rise. So that means that the higher uncertainty happens only for the lower strike price. Now, the low implied volatility here, this suggests that, well, I would say the traders expect less downside movement. They don't really expect a dramatic short-term move, but they price in higher risk for a significant drop below 800 price level. As you can see that the IV is very skewed over here. Well, the implied volatility for a call over here for call options is relatively steady and low around this current price, which is with the modest increase somewhere around 900 and 950, I would say. So this is there's a growing optimism that the traders appear to be anticipating around this range, 900 and 950. All right. Now you can also spot out there's the high volume around 950 levels here. So this shows that the market expect the price to surpass this level, but I would say that it's rather unlikely to see a very strong surge in price. I mean, kind of unlikely to touch $1,000 level, and that can be explained when you see the IV here, which is relatively flat call IV. So it's very hard to go beyond $950 level. Now let's take a look at the implied volatility trend chart to understand the sentiment better. Now let's take a look at this implied volatility trend chart. Well, the y-axis represents the same implied volatility level. The x-axis represents the date, the blue color represents the put options, and the red color represents the call options. Well, for these two lines, the green color represents the 50-day moving average of the implied volatility, and the purple color represents the 200 moving average implied volatility. Now, if you observe towards the end that you can see the both the call and the put implied volatility is trending up here. So this is usually a sign when the market is expecting more price movement or a more choppy movement moving forward. Now, if you take a closer look here, the call options, the red line is showing slightly stronger upward momentum compared than the blue color, the put options here. Well, this hints that traders might be leaning more towards bullish. So we're expecting that the price will climb higher. And for those of you kind of panic looking at this increase of implied volatility, now you can also refer to this moving average over here. Though I would say that this is pretty steady right now, but if you can see, it's slightly declining. So this tells us that while there's a short-term spike in excitement over here, well, the longer-term trend is still fairly calm. So we're kind of like expecting more on the continuity of the current bullish trend. Well, based on the current analysis, I would say that the price trend suggests a potential movement towards this $900 to $950 range. So this upward momentum still appears to have some room for continuations. However, for those looking for a lower risk entry, then I would say $800 support zone might present a relatively stable area to consider given its historical significance in the price structure. Well, so that's all the analysis that I have for Netflix today. And if you believe my sharing is useful, please give a thumbs up, subscribe, and click the notification so you don't miss out any good opportunities again. And please leave any comment below if you want me to analyze your favorite stocks whenever the opportunity comes, so I can share more smart money insight for you. Well, see you in the next ones and trade smart.